Life's tough, you know, Thanksgiving in Crete. Christmas in Japan. I don't know how there's enough hours in the day for me to travel.
Do you even know where Crete is?
It's a place.
What's up, everyone? It's Huddie here from Clover Trading. Today, we're gonna talk about my year in review. So this year was all about getting back to the basics. You see, when I started trading, I was a big fundamental trader. I wanted to find the agenda behind every single stock, why they were running, how they were running, and what their end goals really were. In 2020 and 2021, we lost sight of that. It seemed that a lot of the stuff in the filings did not really have an effect of where the stock was going because it was just so much euphoria in the markets. We lost a lot of that this year. And it came back to finding real edge deep down in the filings, and you really had to dig to find them. So again, getting back to the basics, what's the company really trying to do, and what's the agenda here? That's what this whole year has been about, and some of my biggest trades come from that type of research and nuance. It all kind of started with Bed Bath & Beyond at the beginning of the year. They had one of the more toxic death spiral offerings that I've seen in quite some time, and the price action reflected it quite greatly. And the ability to know exactly what the offering really was and the future prospects of what Bed Bath & Beyond will become allowed me to nail one of the biggest trades of my career in that ticker. There were some ugly moments this year, particularly the ugliest moments always come from you stepping out of your lane or me stepping out of my lane. Some of my biggest losses came from the bank fiasco back in March of 2023 when the bank started crashing, and all of a sudden I decided myself that I was a banking expert and I knew the future outcome of which bank will survive and which bank won't survive. And that led to part of the largest loss of my career was trying to dip by those stocks. And it wasn't with an intraday type of perspective. I mean, you know, people could dip by the volatility and make good money or short the spikes. But my intention was not to day trade them. It was more to long-term get a good buy on these bank stocks, and I ended up taking quite the haircut trying to do so. And that was probably one of the more detrimental moments of this year for me. The other detrimental part of this year, it was actually leaked from 2022. In 2022, one of the biggest edges in the meta of the year were these Chinese pumps that were, you know, spiking from an IPO price of 4, gapping up to 30, and maybe 5 days later crashing right back to where they came from at that $4 price. And there were a lot of those stocks I was able to do very well on. And that's the most important thing in stock trading, is to not put yourself in the field of disaster, keep your losers small, and make sure your winners are bigger than that. When I'm in a losing streak, the first thing I'm doing is I'm reviewing my trades. I'm saying, what's the setup? That's like the most important thing. Is there a pattern that I am trading? In my mind, you know, I have 2 or 3 very consistent setups, like coming back to the well over and over and over, where it's rinse, wash, repeat. But what happens when that setup isn't there every day or every week or every month? You know, you're sitting there at the computer every day and you're looking for opportunity. You think you have to make money and you want to make money and you think you have good ideas. And that quite often will lead to an over trading spell. And oftentimes that my losing streaks come from over trading. It's the whole quality over quantity type of conversation. Whereas I'm taking a lot of trades that don't fit my bread and butter setups that I know I don't have good win rates on, good risk reward on. Maybe I'm bored. Maybe I haven't traded in a week. I haven't seen my bread and butter setup in quite some time. And that's what leads to losing streaks for me. And that's why the first thing I do is I review my trades. That's always the most important thing to do. And then the next part is, okay, how do I get back to my bread and butter? How do I get back to familiarity, to comfortability? That's where I'm always trying to stay in the market, things that I'm comfortable with, where I understand the price action, I understand the setup, I understand how much a stock should drop in a day or how much it should spike against me in a day. If you focus on one specific setup, you can really start to understand, what am I willing to do when I lose? Besides smoke a joint. What really starts to bother me when I'm losing is mistakes. If I trade a setup perfectly and I end up losing, you know, my normal loss, and I do it 4 or 5 times in one day, that's fine because I know that I attacked credible setups that over the long run will make me money. But those setups can still be there and I could attack them wrong. I could give into anxiety and FOMO and certain emotions that make me act out in a way that isn't really complementary to making money within the setups, what it's calling for me to do. And if I'm making mistakes in that sense, and I'm starting to lose and compound the losses and I'm starting to bleed out, that's more bothersome. So the first thing that I allow myself to do is close the computers down. I really do. In these days where, like, again, kind of how I already said it, my setup isn't there every day, let alone 4 or 5 of them. So it's very obvious for me to kind of identify when I'm fighting a stock or just trying to be right or trying to make back the money for the day by doing, again, some of that over trading stuff that usually doesn't result in anything good for the longevity of my account.
What leads me to be more of a fundamentalist versus a day trader
is simply I just wanted more edge behind the nuance that I like to do in the market. I'm pretty much buying and kind of short selling everything. I mean, I tried every single pattern that you can find out there, researching different gurus, different stuff online, whatever I could get my hands on, and I diligently tried and tracked a lot of different strategies. So,
ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining unlock the power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, unmatched trade execution, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
I was negative when it came to buying stocks. I did not make money after 2 years. I think I was down like 2K. On the flip side, on the short side, I was up 20K. So okay, Huddie gets tagged with this thing that he's a short seller and he's walking around, town telling everyone that he's a short seller. And the predominant thing that I like to short sell were first red days. Pretty soon into about a year and a half of just predominantly shorting first red days, I realized that there were a couple landmines that I had to avoid. It wasn't just about shorting every single stock that was going red for the first time. There needed to be criteria to know, which ones were dangerous, which ones I should be more aggressive towards. And also like dilution, share structure became super important to me because that gave me the gauge of how the stock could actually move, what's in its capabilities, what are the possible outcomes within this setting. I think it comes from me wanting to be certain. I want to be right more often than not. So this thirst for certainty of, okay, if the question is, should I be patient? Well, it's not just based off the candlestick chart. For me, it's saying, okay, maybe the chart is extended and it deserves some kind of patience, but there's something else going on. Is there a sell the news event? Is there something that's super dilutive? Is there something that might be going on for a couple days that allows me to know that I should be patient instead of just me guesstimating and every day that I take a short position, trying to wonder if I should be patient or not. That kind of indecision and indecisiveness leads to a lot of anxiety and stress for me. So that's why I started to dig into the fundamentals and filings of companies, because I just wanted more certainty as to why I was doing the things I was doing instead of just randomly doing it. The basics for me have always been first red days. Stock runs 1, 2, 3 days in a row. First time it's going red and it's extended. That specific day is always the basic for me. It's my bread and butter, and it's because I understand at each time of the day where the stock should be, what are my reshorts, what are my ads, how do I get add to a winner, and where do I cover and when do I want to cover? Just knowing a setup like the back of your hand is really important, and having that setup to be there for you is, again, just really important. So that's the basics for me, is a very simple chart sequence. My 2024 resolutions is definitely I want to stay on the East Coast. Predominantly for most of my trading career, I've been trading on the West Coast, but specifically because I want to allow myself more time in the morning to prep. I want to kind of be there at 7 a.m. doing my research for the first, 30 minutes to an hour, and then take another hour to really map out what my plan for the day is. One of the biggest problems I did when I first started, and something that you're kind of taught to do, maybe it's just in our nature as humans, or maybe, there are people that teach you how to do this, but I used to think that the whole goal was to catch the morning spike. And I would really caution against that type of mentality. As a beginner, this is a thing that I can remember like it was yesterday. And this is just my experience. It might not be the same for you, but my first 5 days in the market, I thought, you see something gapping up 20 or 30%. It's got a press release that, especially if you're a beginner, you don't really know if it's a good or bad press release, but you're going to use your best judgment, your intuition to justify that it is a good or bad press release. And within 5 minutes, buying the stock, trying to chase the morning spike and sell it within the first 15 minutes. And you think that's day trading, and then buy dips and sell strength. I would really caution against that. And maybe there's a setup out there that works for you, but for me, the best thing I could have done was to get away from the FOMO angst of wanting to catch a morning spike. Implementations I had this year, and I guess it goes back to the basics, is I started to use Spiky, which is pretty much this database of all the stocks, and you can kind of qualify what daily charts that you want to look at. And ICCT was one of those where, I wanted to really get a good idea as to how to go about short selling this stock, but it wasn't something where I could just pull up the last runner and compare it to ICCT. ICCT was one of those unique, obscene charts. It was a stock that pretty much ran 600% in 3 days, right? Without really having a pullback day, which is unique. You don't see a lot of stocks that run 600% in a day. And so what I did is I went on Spike Eat. I looked at 10 or 20 different stocks. I don't remember the exact number. This was, maybe 6 months ago. But I used Spike Eat to give me examples of other stocks that have done this sort of move. And I used those examples to say, hey, in the past, this is how much they pushed in the morning. This is how much they've broken down by the end of the day. And this is what I can logically expect from this setup. And it allowed me to have a better plan coming in the morning. So that's just purely technical analysis. But one of the bigger things I implemented in my trading this year was to use Spike Eat to have a better representation of what to expect from that day. My 3 worst trades this year revolved around doing things that I normally wouldn't do. First of all, what I'm trying to allure to is we had a banking crisis back in April and the bank stocks started crashing. Huge. Again, this is like maybe $30,000, $40,000 in losses this year that I tried to dip by the banking stocks and kind of have like a long-term hold position on. And since a lot of them went to zero and absolutely went bankrupt, I lost a lot of money doing that. But understand that if I pick up any of my trading books throughout my career, the things that again have made me very successful and wealthy, none of them have any discourse about banking stocks and buying the dip on a crisis that might get worse, right? So you understand how degenerate and gambly that really is in the nature of wanting to do that in the first place, right? And so that's one of the bigger lessons that I think any day trader should really acknowledge is like, again, it's having that understanding of where you're supposed to be, where your eyes are supposed to be. And unfortunately in that moment, what I was supposed to be doing is not buying the dip on those stocks. And that was a very valuable lesson for me. So one of the other setups that really caused me a lot of pain were these liquidation plays. These IPO tickers that probably have no revenue, are located somewhere in the Cayman Islands or maybe out of Hong Kong. And it's very obvious to me that they are blatant scams. And although they are scams and a lot of them do go to zero, timing them and not being caught up in the scam itself when they are manipulating them is very hard to do. But understand that they're not all made the same. They're not all gonna act the same. It took me a long time to realize that there are these companies that are listed on these other exchanges that have certain characteristics about them that I can clearly identify as different than my normal type of pump and dump that I like to go after. And it had to take a number of losses for me to say, hey, I don't want that in my trading, anywhere near my trading anymore, because again, I can't control the loss when these things really do start squeezing the plethora of day traders that go after them without really any concern as to the risk. And those are my biggest losses this year. They're not from my bread and butter. It's not like I saw a picture perfect first red day and I said, hey, Huddie, let's risk 40 grand on that one and see the results. And that's a huge lesson that I learned this year. And I've always been learning it, but more and more ingrained every year of where do my eyes need to be? Where do I excel? Where does my risk belong? Where should my biggest losses be? I can honestly say I wish my biggest loss was in my bread and butter setup because that makes more sense to me than losing on something that is not my bread and butter setup.